In this section, we're going to talk about swing trading by catching breakouts and breakdowns. So, breakout trading is considered a confirmation trading, like you're waiting for confirmation of a trend or a movement in the trend. So, here's a beautiful example right here of a breakout trade that we took last year in 2016. So, we had this large ascending triangle, which is a consolidation pattern, and the tighter it gets, the more it's kind of ramping up for a breakout, right? It's kind of like the quiet before the storm. Just like the markets go up and down, they also have periods of stability followed by periods of great momentum and volatility. So the initial breakout on this would be 470, catching the breakout above 470. So that would be an initial good entry. But you don't have to go all in on the very first trade, right? Position sizing is a way to manage risk because sometimes you'll go to catch a breakout and it turns out to be a fake out. So here's an example. Right here, we can see 300 is kind of like a breakout zone. And the price creeped up to 316. Now, some people may have longed looking for a breakout and it turns into a fake out where it just kind of pulls back on you and just dumps, right? So if you go too heavy, if you use excessive leverage and you go full size on this initial breakout, then you could lose a lot of money, right? Because the market can pull back with a reversal very, very quickly. So you can start off with a partial size, let's say 20%, and then on confirmation, as the market moves up, you could do what's called pyramid trading. So this would be the last major high would be 500. So breaking out above this, you could add to it. And then you could also, once you definitely have a clear direction, if we zoom in here, you'll notice we have this consolidation pattern. You could also add to it, right? So there's different areas where you can kind of add to your trade on the first consolidation pattern, or so either buying a dip or took multiple days of consolidation, adding to it on a breakout on another move up. So there's a few different entries, and since your first entry was really low, it'll keep your cost basis down. So this is a much better approach at sizing into a trade to manage risk. Because let's say you catch the breakout and then it flops over, then you could just kind of set a stop and get out of the trade. So you add to it and then you have confirmation. Now, where do you have your targets, right? So you want to be able to set your targets ahead of time. Well, this is where we use fib retracements and fib extensions. So if I were to use a fib retracement on the entire bear trend, the last bear trend that we had from the top to the bottom, we'll notice that the 61.8 area is likely an area of resistance. Now we could find confluence. So let's say we use a fib, trend-based fib extension, measure from the bottom to the top minus the retracement, and confluence is when fib extensions and retracements match up, when there's an area of high probability where they match up. So here we could see there's a lot of confluence. Now, just like scaling in, you can scale out in various different orders. It doesn't have to be all at once. So for example, perhaps you take some profit over here. Perhaps you take some profit right at this fib level. And then on confirmation of a breakdown, we're starting to see some red, the backside of the trend. We had a breakdown below 700 support at the time. And then you could just kind of close out the rest of the trade on the breakdown of support there, right? So you want to be able to assess also, what risk to reward are you looking for? So you can use this when you're in a long position for risk to reward. So let's say your first entry was right here, and you can squeeze out 64%, let's say. And if it rolls against you, where do you set your set your stops, essentially, right? So let's say you risk 4% on a partial size to get 64%, right? So that's a fairly good risk to reward ratio, if you want to run tight stops, or you could run looser stops. Let's say the breakdown of this trend line right here, that would be like 7% type of thing. So the ratio is like 8.52 even on that. So that's a fairly good risk to reward ratio. And so this is also riding a trend. This is a high momentum movement, and it made 4 moves up. So you could even start locking in profit on the third wave up, but it made 4 waves up. And the same thing could be applied for breakdown trading. So if we were to just remove all this, so let's say you were trading this and you see multiple levels of support here. See it testing. See, this would be like a fake down. Comes down, but it snaps back up, so you'd want to get out of a trade like that. But then over here, you have a breakdown right there. Now, and this breakdown is interesting because it also lines up with a bear channel. A channel is kind of like a range that the price moves in. On whether it's a bear channel is a downwards range and a bull channel is an upwards range. So you can see that there's this general price range that it's locked into on its trajectory down, right? And so we have a breakdown. An interesting thing with breakdowns and bear trends is that oftentimes when you break down and it bounces, prior support turns into resistance. That's how you know that the trend is still on. And the same goes for a bull trend. Even when you have a correction, right? You'll notice here, prior resistance turns support. Even here, prior resistance turns support, right? And even at this area right here, prior resistance turns support. So there's nothing wrong with probing the market with a partial size for a breakout. A lot of times you will get faked out, and there's nothing wrong with that, because if you're going for the bigger move, sometimes it takes a couple of strikes to hit a home run, right? So you might get faked out a few times, lose a couple of percent if you run tight stops, and then eventually you hit that home run, that grand slam play, you add to it full size, and then you get confirmation and really nice move, nice play, right? Sometimes it can be a double, sometimes it could go up 60% or higher. All right, so that's it for this section. I'll see you in the next swing trading strategy.